Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are having a very nice weekend so far. Now, keep in mind, all of these options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that I like to run on the channel. 3 reasons why I enjoy doing the wheel strategy with most of my capital in my trading account are as follows. Reason number 1, it's a very easy strategy to learn, manage, and it's also very scalable depending on the size of your account. You can scale it up or down depending on the size of your equity at hand. Number 2, it's a very passive strategy as well. It requires very low time management, only 10 to 20 minutes a day, and you're pretty much done, which means that you can do it while you're working, while you're on holidays, and anywhere truly in any given day of the week. And now lastly, reason number 3, I love this strategy is because it has a very high win rate, provided that you are respecting the strategy rules. Most of all your trades, 90 to 95% of them, will end in the green, and the ones that don't, well, you'll just be assigned some of your favorite companies and have to buy some shares. So in today's video, guys, we're going to go through a few things together. Number 1, we're going to be talking about what we have at hand this week. Obviously, we're going to talk about the ongoing conflict between Iran, Israel, and now the direct involvement of the United States. So number 1, we'll take 5 minutes to just explain the timeline of what's been happening in the last few days. Where do we stand in terms of the geopolitical conflict in the Middle East? Also, thereafter, review some of the macroeconomic events that we will be having in the markets this week, and also take a look at the technicals on the charts. If we do pull back, how much can we pull back? Where could the dip possibly stop? And where would be some very nice levels to go shopping, provided that this is just another buying opportunity in the short term. Thereafter, number 2, we're going to be going through these strategy rules. Now, because we do have a bit more volatility in the market, I'll be spending a bit more time on the strategy rules just to give a quick refresher. Overall, spending 6-7 minutes on that. And thereafter, guys, we're going to get into the top 5 options plays of the week, of course. And as per usual, stick around to the end because I have about 10 bonus plays for you too. So everything should be fairly interesting. Hopefully you guys enjoy the video. Let's jump right into the action, shall we? Okay, so where do we stand now? Number 1, in terms of the outlook for the week. Well, we know that last night was a very volatile and tumultuous evening for one very clear reason, which I'm pretty sure everybody obviously knows about right now, which is the US's direct involvement into the Iran-Israel conflict. Donald Trump saying the US has attacked 3 Iranian nuclear sites and totally obliterated them. This came out around 9 p.m. Eastern on Saturday evening, and whereby the US sent a task force, a lot of fighter jets and bombers into Iranian airspace and took out 3 major sites overall. Now, I'll remind you when this all started, guys. Well, it's been starting for about 8-9 days now, but the most recent update from the Trump administration was on the Friday session, which led the markets to have a little bit of a dip, where Trump said he is giving Iran 2 weeks to come to the negotiation table. If not, they were going to take decisive action. Well, they didn't even wait 2 days to actually take that decisive action. Obviously, prior to that, there was a 60-day negotiation window, which Iran did not make, unfortunately. Trump gave them an extra 2 weeks in theory, but unfortunately, right, the conflict started as of last night with US direct involvement. So in terms of what exactly happened, well, there were 3 nuclear sites that were targeted, 2 enrichment facilities and 1 research and fuel facility as well. Massive amounts of airstrikes overall. You can see some of the impact craters. 3 sites as follows: the Fordo fuel enrichment plant, the Natanz enrichment complex, and the Isfahan nuclear technology center, which does fuel facilities and also research facilities as well. You can see some of the before and after damage on the left. This is before, this is after on the right. So before, it looks something like this. And now you can see the massive amounts of damage that was done to the Fordo segment right there. If we move into the Natanz segment as well, very nice satellite imagery. Well, not very nice in terms of what's happened, of course, but I mean, the presentation is well done, is kind of what I'm trying to say here. This is the before, this is after. Massive amounts of craters, obviously in the ground, because the US used some bombs that they had never used before, the massive ordnance, essentially bunker buster bombs. And here is the last facility, Isfahan, as well, obtaining massive amounts of damage. This is the before, and this is the after pictures, of course. So obviously, there is going to be some retaliation. What we had in terms of news from the administration is Trump declaring a massive victory and that the operation was a massive success in scale and size and in terms of how they executed it. Thereafter, this morning, we had Vice President J.D. Vance saying the U.S. is not at war with Iran. They're at war with Iran Iran's nuclear program. That was one of the few comments that came out this morning overall. Now, in terms of retaliation, we do have immediate retaliation from Iran targeting Israel, not targeting any U.S. sites just yet, but Israel was the recipient of a lot of fire early this morning. They've been trading blows once again. 21 people unfortunately wounded as Iran fired dozens of missiles following the U.S. strikes on the nuclear facilities. Thereafter, what we also had a few hours ago is Iran's possible threat to close the Strait of Hormuz. If you guys don't know what the Strait of Hormuz is, it's this little strait right about there between Iran, between the UAE, Qatar, and Oman, of course. A lot of oil comes down this strait from Kuwait, from Bahrain, from Qatar, from the UAE, and also on the outskirts of Oman right here, but especially from Saudi Arabia. This is where a lot of Saudi Arabian oil facilities are on the west side of the country. Obviously, they have access to the Red Sea as well, but this is where a lot of oil goes through, guys, and it's a very important strait in terms of the size and the scale of the shipments that go through there. 20% of the world's daily oil flows, to be exact, and liquefied natural gas outflows as well. That could block $1 billion in oil shipments per day and is likely to send the oil prices soaring. It will come into effect pending a final decision by Iran's Supreme Council. The parliament said that they gave the approval to close it, but the final decision comes from Iran's Supreme Council. So far, at the time I'm recording this video, 2:30 p.m. Eastern in the afternoon, we do not have that final approval. Iran has never done this, not even in the Gulf War of the 1980s. It would be somewhat, what people argue, a bit of economic suicide in doing so because Iran heavily relies on that waterway as well. But of course, the rest of the world heavily relies on it as well. The US, European countries, but especially Asian countries. They will get hit the hardest if this strait is closed down. The US actually urging China to dissuade Iran from closing the Strait of Hormuz because China has heavy interests in that region, guys. They get almost 40 to 50% of all of their imports come through that strait. And China has been a indirect, somewhat ally of Iran right now. They get significant discounts on their oil prices from Iran. So obviously it's one of their major trading partners. So it's not in China's best interest to have this strait closed. So we will see if China is able to negotiate some sort of a agreement with Iran for them not to close the waterway. U.S. officials say that they obliterated the main nuclear sites, of course, using 14 bunker buster bombs, more than 24 Tomahawk missiles, and over 125 military aircraft in the operation overall. Now, in terms of how Asian countries will be affected if the Strait of Hormuz is closed, 84% of the crude oil and condensate and 83% of the liquefied LNG that moves through the strait went to Asian markets in 2024. That is China, India, Japan, South Korea being the top destinations for crude oil, accounting for a combined 69% of all the Hormuz crude oil and condensate flows in 2024. So you guys can understand that although Europe and the United States obviously have something coming out of there, mainly from their big trading partner, Saudi Arabia, the people that will be the most affected will be Asian markets. So I would not be surprised if Asian markets open up quite red into the early hours of the futures market tonight. And if you want to take a look at how the futures markets are responding this weekend, we can look at two different gauges. This is one thing that you can look at, the weekend US Tech 100. Obviously, it doesn't have all the volume that the regular markets have, but it acts as somewhat of a guide, a very rough guide right now. This is the NASDAQ. So this one is down 1.32%. I would not be surprised if the markets open up tomorrow 1.3, 1.5, maybe even 2% to the downside. And overall, if you take a look at the Bitcoin markets and crypto, Bitcoin as well, after suffering a loss yesterday on the Saturday session of 1, it is down an additional 2.55. So you can clearly see a movement out of the risk on assets, potentially going to see some moves into gold tomorrow, and oil, of course, will probably be spiking as a result. So that is a quick timeline recap of exactly what happened. In other news that happened this weekend, a bit more lightheartedly, we do have Elon Musk coming out with the pricing mechanisms for the robotaxis. The Tesla robotaxi launch begins in Austin this afternoon, this Sunday right now, with customers paying a $4.20 flat fee. Elon Musk coming into an interview earlier today saying by the end of next year, 2026, we'll have hundreds of thousands, if not over 1 million Teslas doing self-driving in the US. So those were the two most important pieces of news that came out over the weekend. Obviously, one is, significantly more important than the other, but I figured I should bring you this one for Tesla as well, because this was supposed to be their big breakthrough day overall, right? So those are the two things that we're going to take a look at in the markets opening up on the Monday session overall. Now, in terms of what else we have to look at for this week, well, there is a lot of macro catalysts too. Starting on Monday, we get global manufacturing PMI and services PMI as well. We know that front and center is the impact of the tariffs. Remains to be seen. Will that still have an effect on manufacturing and services? If these come in well below the expectations, showing economic contraction, the markets are not going to like that, guys, and possibly will be coming in a little bit lower overall. You know, when you add fuel to the fire right now, we already have one catalyst that we're going to see in terms of the markets coming down early tomorrow morning. Now, in terms of the other catalysts, well, these are all other catalysts, guys, that can bring the markets down. Sorry, let me just readjust this page right here. It was on the wrong time zone. Sorry about that. It was on GMT. So if you see here, that's on the Monday session. Moving a bit further, on Tuesday, we get Federal Chair Jerome Powell testifying in front of Congress. It will be a two-day event where he will be absolutely grilled by Congress as to the Federal Reserve's stance on the economy, inflation, and everything in between. Thereafter, for the rest of the week, Wednesday is the second day for Jerome Powell. On the Thursday session, we get the final output for Q1 GDP. This is now going to be the third month in a row for revisions for Q1. Q2 GDP will come in at the end of the month of June, wrapping up the second quarter, of course. And on the Friday session, guys, we get PCE. So we'll take a look. Inflation is supposedly going to have a slight uptick from 2.5 to 2.6. Anything much larger than that as a result of tariffs or something like that, the markets equally are not going to like. So I would say that it's not that big of a week in terms of macro data. There's no massive jobs report. There's no new GDP releases. There's not CPI or CPI or PPI. We've had that already, but still, any negative news events like this, of course, couple that with the Iran-Israel news overall and the fact that the markets are potentially embarking into weekly consolidation modes. We've been noticing, right? The SPY had lost the daily uptrend over the course of last week. The Qs were barely losing it. As of tomorrow, if the markets end up red, we will have a daily downtrend. And I was calling out on the Friday video, guys, that I filmed yesterday on Saturday, possibly going to have weekly consolidation. Now we have all of the catalysts for possible weekly consolidation overall. If you're wondering the most recent impacts of Iran and Israel direct conflicts, not with US direct involvement, but the most recent ones we had one in the fall of 2023, one in April 2024, and of course, more blows traded in August and September, all of which resulted in buy the dip opportunities, but the volatility did last for about 2-3 weeks. We are now in week number 2 of the ongoing conflict. So the volatility can possibly continue, and expect some spikes in the VIX overall. If the markets do pull back, we have tons of support below us. The bulls are still in control of the time frames. We have a lot of nice areas of support. SPY 585 down to 575. Nice little buffer zone. The EMAs are there as well. We will probably find some buyers upon our first entry into these zones. QQQs, same concept. On the Qs, that's 510 down to roughly 500. This 10-point range could see the bulls get a lot of buy the dip support down there for our first touch of that level, which is why this week I still do believe, especially we're probably going to see an increase in the VIX, guys. We'll be able to get some fantastic strikes on our favorite stocks. But this week especially, guys, we have to focus on the highest quality companies, right? Because if the whole market comes down and we're writing put options, you possibly might be assigned, if the volatility is too large and the moves start getting really, really large, if you do get assigned some stock, right? If the markets end under the put strike prices that you write, at least you want to be in your highest quality, highest conviction companies that you know that will be able to get through anything that the market possibly throws at them, because their business models go over and above any short-term conflicts or any short-term economic effects, right? So that being said, that's your market introduction. Spent a bit more time on that one because I felt it was important, because we have some very, very breaking news, of course, right? Now let's get into some of the strategy rules, and I'll be going over these in about 4 or 5 minutes, guys. Right? I have a more full video down below in the video description that I will leave down below if you guys want to check it out. But I'll be doing a quick recap of the put strategy rules, just because this week I think it is absolutely essential, guys, that you respect the strategy rules with this volatility, with these geopolitical events that could see the markets take a little bit of a tumble, right? Very important that we respect every single one of these rules, okay? And these are the type of markets that I really enjoy selling puts in, because selling put orders is basically like buy limit orders that pay you. You basically lock in a strike below the market, and you are possibly willing to buy the stock down there. If it does not get there by the Friday close, Perfect. We get to collect all the options premium. If it does get there, at least we know that we're buying a stock at our desired target levels, which should be into several key areas of support. So in terms of the rules for selling puts, number one, build a watch list and filter by red, guys. I have an options watch list right here with a lot of my favorite companies, 150 to 200 stocks to be exact. First thing every morning, I filter this list by red, and I want to go shopping for the stocks that are the most red, because when they are already big red, we can write further and further below the market, ensuring us that even if we do get a sign, we're getting a fantastic possible price for a weekly decline. Rule number one, and it's rule number one for a reason, guys. High quality, high conviction companies only, especially in this market, guys. You want to be going for your favorite stocks, playing the wheel on your favorite stocks overall. Number two, we want to be looking for stocks in monthly uptrends or long-term ranges. Monthly uptrends are something like you can see right here. In terms of the SPY, just put it on the monthly chart. This very beautiful monthly uptrend. A lot of stocks are still somewhat in monthly uptrends right now, or in long-term ranges. A long-term range could be something like you identify on Intuit stock. You guys can see that Intuit stock was in a long-term range for a long time. You want to be playing the bottom end of a support range at all times. So uptrends and ranges will be your best friend when looking to sell options into the market. Now, rule number three, excuse me, that's the wrong list. No earnings this week. So earnings this week, we have a bunch of companies, Micron, FedEx, Nike. Earnings are very volatile events, guys, and avoid them, okay? Do not write any put options on stocks that have earnings this week. You guys know earnings can go either way. Even if a company has good numbers, it can go down 5, 10, 15% after earnings. So do not take the risk. Number four, we want to be writing put options into weekly support areas or areas of breakout retests. Weekly supports are very large levels below us in which the price should be coming down and encountering a lot of buying pressure from our bulls, which is why we want to be writing puts into those levels overall. And a breakout retest, very simple. I'll bring up this example again. This is what's known as a trend continuation trade. There's been a couple of them as of recently, right? Where you have a long-term range. This is the upbound layer of support, of resistance, excuse me. You break out of it, retest at the downside, and then possibly run. Another stock that's doing something like that right now, there's a lot of them. Uber is something like that too. Breakout of a big, long-standing resistance range, backtest it as support, and you might get the follow-through. Those are high probability trades. So support level trades and breakout retest trades are high probability trades. That's why I like taking them. All these rules are putting most of the odds, all the odds possible in your favor of not being assigned. Number 5 and 6, we want to be writing at or lower than the expected move. Expected move is what Wall Street determines is the probability of a stock moving in a given week. If you don't know what that is, go to this website right here, barchart.com, type it into Google, bar chart, expected move, Google or Amazon or Nvidia, whatever stock you want to look at, then look at the expected move for the week. You want to be below this, right? Because it stands to argue if that's the expected move and it goes and you're below that, normally you have a bit of what they call mean reversion. If it breaks the expected move to the downside, normally it will retrace back into it by the end of the week, right? That's another thing that you could put a lot of odds in your favor of not being assigned. Number 6, writing on a red or flat day. It stands to argue if you want to be writing below the expected move, well, a red day is going to help you out. The expected move is there, right? You want to be writing below. If it comes into a red day, well, obviously you'll be able to write below. If the stock starts off the week green, then you're going to have to start chasing above and above and above. You'll be above the expected move. That's not good. Don't chase the market. This is not the strategy to play offense. It's a defensive and premium farming strategy, right? Now, the before last rule, we want to be looking for 0.5% to 0.75% in weekly premium overall. This is your take-home pay per week. This is your ROI. If every single week of the year you're making at least 0.5%, that is roughly, without compounding, 26% annualized. The average return on the S&P per year over the long-term time horizon is 8 to 10%. That is 2.5, almost 3 times better than the S&P's average return. That is your building block. That is the baseline. This is a very good trade-off between good risk to reward and also good ROI. It is the sweet spot. Anything higher than this, you're being too greedy. Anything lower than this, and you might be a little bit too conservative, this is the sweet spot. What does it mean? Very simply, guys, if you're looking for 0.5%, just do mental math. It's super easy, okay? So if we take a look here at, I'll give you an example with Google's options chain. Let's just say we want to look for the 0.5% rule. What does that mean, right? It just means that if we want to find 0.5% on the premium, you'd be looking for half of the strike price, let's say 160, in cent increments. Half of 160 is 80. You'd be looking for 80 cents on the bid right here, and you know that you'd be getting 0.5%. If you want me to do the math, I'll prove it to you. 0.8 divided by your strike of 160 is literally 0.005, or in other words, 0.5%. It's a very easy way to go through a ton of options chains really quickly in your head and be able to just see, okay, let's say, right, I'm interested in Google down here at 160, right, or something like that. Am I getting 0.5% down there? You go on the options chain, you check. If it's there, perfect. You can take the trade. If it's not, you move on to something else, right? Very easy mental math way of determining whether or not you have a 0.5% rule. And lastly, set a take profit order at 90% of the contract value. It ensures you are being capital efficient, guys, overall, right? In terms of if you write these options on Monday or Tuesday, and by Wednesday morning, they're 80, 90, or Thursday morning, they're 80, 90% profitable, you take that trade off the table, lock in the profits, and go shopping for something else. That way you're not holding the contract all the way into the Friday session. You can be capital efficient and rotate into some different plays. Those are most of all the strategy rules. Lastly, covered calls. If you get assigned a stock, if you end up having to buy the stock because your puts because you get assigned after the Friday session, you write covered calls. This is a way to buy the dip. And then once you are possibly in the stock, you won't get assigned with this strategy. You won't get assigned very often, right? Maybe 1 out of 10 times. And this is like the roulette wheel. It's independent probabilities, right? It doesn't mean because you take 9 trades, the next trade will necessarily be assigned. No. Every trade you take has a 1 in 10 chance of probably being assigned, right? That being said, if you do get assigned, we want to write covered calls between 0.5 and 1% in weekly premium, and you want to be writing at your assigned strike price or 1 strike higher. If I get assigned Google at 160, I will write the 160 calls. The only time that I write 1 strike higher is if I get assigned on Friday at Google 160, and the following Monday, Google has very good news and it gaps up to 163, 164. Maybe I write 1 strike higher to lock in a bit more equity gains. But I'm telling you guys, 90 to 95% of the time, I'm writing at my assigned strike prices overall. That is a quick recap of the strategy rules. Hopefully you guys enjoyed that. I haven't done this in over like 2 months. I was referring you guys to the videos down below. But now with this volatility in the market, with everything that's going on, I really wanted to reiterate these rules, guys, because it's going to be very important to follow them if you want to have the best amount of success running this strategy. With all that out of the way, let's jump into the top 5 options plays, shall we? So in terms of the top 5, you will notice that many of these have been recurring in the last few weeks. Why? Because they're my highest conviction stocks, and they're still within the realms of the levels that I want to play these companies at, right? If a company runs too far away, I can't play it anymore. But if it's still in a range of support and I'm trying to play it down there and it's been there for the last 2, 3, 4 weeks, I will keep playing it and I will keep farming the heck out of the premium on that company. With that being said, stock number 1, once again, is Google. So Google, I like it for a few reasons. The number 1 being the valuation down here at around the 170 range. It is extremely cheap. Google dropped 3.6% on the Friday session, coming down into support, and the bottom end of support is 161 overall. You can see the bulls had built a very nice shelf of support here. Below that is the tariff fear lows. And even if we get assigned here, the lower 160s, where can the market possibly drop to on Google? 150, and that's when you come into all the tariff fear lows. Going to be some heavy buyers on Google down there. I would not mind being assigned here, right? It's not as if Google is up here and I'm trying to play there, and then you have all the way down here to possibly reach a support area, right? We're into support, and below is a second area of support. For now, I want to play this area right here. The expected move is 163.32 for the week on GOOG. So let's have a look on the options chain. Can we find anything below the expected move of 163? Let's pull it up. Where are we going to find the 0.5% rule? Look, the 162.5s right now, half of 160 roughly is about 80 cents. Are you getting 80 cents on the bid? Yes, you're getting $1.13. Now that's a little bit rich, but one thing you can possibly find, keeping in mind that futures are red right now and the markets probably will open red, Google is probably going to open red. You can see here the 160 strike is offering 67 to 70 cents. Not quite 80 cents, but close. If Google drops a little bit more tomorrow morning, this contract, especially with a rising VIX, will probably show 80 cents. Who knows? Depending on the size of the drop, maybe you can even find it at 157.5. So my strikes for Google this week will be 160 or 157.5. Be dynamic with your strikes, guys. The goal is to get the cheapest possible strike here on Google while still getting paid our minimum ROI targets for it. That is stock number one. Stock number two is going to be Amazon, another one of my highest conviction stocks, right? We're keeping it with the highest conviction names of everything. Amazon has support below us here, 204 down to about 195, and in the event that we crack through this zone, the next area of support is very close, 190 down to about 180, but we want to play this first level here, decent support, all the EMAs are there, and the valuation as well is not too bad. Amazon is having some very good growth rates right now, the weekly bulls are still in control, and the weekly higher low is here, so we will slow down when coming into this area, which is why I do want to play it. That being said, Amazon's expected move is 204.34, this yellow line right there. Let's go shopping on Amazon's options chain and see, can we get some premium below the expected move of 204? Keeping in mind that Amazon has a very good chance of opening red tomorrow with a higher VIX as well. So, as you can see right here, the 2025 strike, what is half of 200? It's roughly 100, right? That being said, you'd be looking for roughly $1 on this strike. It is not quite there, but very close. If Amazon comes down tomorrow or if the VIX goes up or both, you probably will be able to find $1 on this strike. Depending how much Amazon goes down tomorrow, who knows? Maybe you even find it at the 200s, maybe even the 197.5s. First glance for me this week, the strikes that I'll be trying to play is 202.50 down to 197.5, trying to get the cheapest possible strike price while still getting around 90 cents to $1 for those contracts. So keep that in mind. That is stock number two, Amazon. Stock number three is going to be Nvidia, another one of my highest conviction stocks in the market right now. Their growth rates are fantastic, and in the sub 140 range, the valuation is not too bad. The PEG ratio is fairly manageable, free cash flow yield is manageable, and the price to earnings, although not as low as it was down here, is still relatively manageable. That being said, the bulls are in control of this one. However, we've been getting rejected at the all-time high resistance range, 145 to 150. And what better catalyst than what we're having right now going on in the world to possibly send Nvidia into a weekly leg of consolidation? Good thing for us, though, there's massive support below, 135 down to about 125. So our goal is to play this support range and try to play it as deep as possible. It's a big area. This was resistance, support for a while, resistance again, almost resistance again. Now we're through it, so we're looking for the back test of it, and the EMAs are planted there too. That being said, the expected move for the week is 139.92. That's a little bit tight, guys. I wouldn't be surprised if by tomorrow morning this expected move is widened out. I want to be in support, 135 down to 125, as deep as possible. So right now, with the current prices, let's see where we can get on Nvidia. For sure, we'll be able to get better than 139. Let's just see how much right now. By tomorrow, if Nvidia drops 2-3-4%, you'll probably be getting better than the prices than I'll show you right now. If I want to play the mid 130 range, right, half of 130 range roughly is about 65, 70 cents. So let's go see where the 0.5% rule is right now. Right now, it is roughly between 137 and 138. However, if the VIX goes up tomorrow and Nvidia drops, this premium might be able to be found on the 135, 34, 133 even. As deep as we can get, guys. Be dynamic with your strikes. Try to get deeper. If you can see almost 0.5% at the 132s, I don't know how much Nvidia is going to drop tomorrow, right? But if it does have a decent drop and the VIX goes up, we'll be able to play some of those lower strikes. Try to get as close as possible to 130. If we can somehow find under 130, let's say Nvidia goes down 5-6%, I don't know, anything's possible, right? At that point in time, you'll be looking for under 130 all the way down to 125. That'll be a very decent pullback to play on this fantastic company. Stock number four is going to be Apple, another one of my high conviction stocks. It's known as a more defensive name in the whole tech trade. Currently, we're bouncing off a nice area of support, 196 down to 187. That is previous resistance ranges from 2023 and most of the tariff fear lows other than the massive Liberation Day candle, of course. That being said, Apple's built a fantastic base of support below us, so we might want to play it if Apple is something that you don't mind playing. That being said, the expected move for Apple right now is 196.23. Let's go shopping on the options chain. How far below 196 can we actually get some Apple short puts into play, right? Let's go take a look at Apple, June 27th right here. As you can see, if we're looking for roughly mid 190s, half of that, just do it in your head, right, is roughly 90 cents to $1. Let's call it 95 cents, right? So where's the 95-cent strike? Well, there is none. You can see here the 197.5s are fairly pricey. This is a bit too aggressive for me. The 195s is almost respecting our rules, right? If Apple drops tomorrow by 1 to 2% with the rest of the markets, probably you will find maybe even more premium than that on the 195s, but who knows? Maybe even you find some premium at the 192.5s. as deep as possible into support, guys. 195 is not bad. It's below the expected move. It's right there. But hey, if I can find the 192.50s or even the 190s, I'll probably go with those and look to lock in the best possible price for Apple, right? And that's everything for stock number 4. Stock number 5 is another high conviction play for me, which is Shopify. I like this one. I really enjoyed their earnings. We covered them on the channel. Fantastic growth rates overall, expanding in terms of countries, expanding in terms of market share. Revenue growth rates per year are fantastic. And the Shopify customers are doing very well, even amidst the tariff turmoil right now. The valuation, some would argue, is somewhat rich, but then again, the company is growing very well. I'll just show you some of the forecasts for the company. They're net margin profitable overall too. EPS, gorgeous expansion in the next few years, and revenue, gorgeous expansion in the next few years. So although we may have some short-term volatility, I would not be assigned in the closest area of support, which right now stands at roughly the 100 mark, all the way down to $90. This $10 range that Shopify has been establishing largely since the better part of the end of November, other than, of course, the absolute tariff liberation fear lows, right? So keep that in mind. I would not mind playing this Shopify range right there, but we got to play it with some space. Shopify has some good volatility. We want to benefit from that volatility and not right too close to the stock price. So we want to get the best possible premiums, right? That being said, the expected move on Shopify for the week, excuse me, let me just pull it up again. That's not the correct window. Let me just go back to it. This is the correct window. Expected move is 102, almost 102 flat, right? I have the expected move right here, 102.01. So where can we find better than that? Getting 0.5%. Well, as you can see, half of $100 is 50. It's very easy. So you're looking for 50 cents. Look, you can find it here on the 99s. But if Shopify with the rest of the market tomorrow drops 2, 3, 4%, who knows? Maybe you can find even better strikes. Maybe you can find the 96s, 95s. So for me this week, I'll be trying to get as close as possible to 95 or under. This would be the bottom end of the support range and below the 200-day EMA. Be dynamic with your strike prices, guys. These are not set in stone. I'm giving you guys support ranges. Our goal is to try to get the lowest portion of that support range to make sure we have maximum amounts of, it's like a buffer zone, right? The bears pull back into it, and the whole time they're into it, the bulls are buying, right? So you want to be as deep as possible into the support range rather than being at the top of it, and then the market pulls down here and then reverses, right? You want to be in the middle of the support range or at the lower part of it to make sure that if we start coming down, they get slowed down, and possibly even if you are assigned or not, right? The markets have a good chance of bouncing somewhere into the deeper end of the support range and then getting a bit of bounce going. Even if the end result thereafter is the rollover, at least you are nicely, almost guaranteed, right? A first bounce out of support. So that is how we try to play this strategy. That's everything I had for you guys for the top 5 options plays. Hopefully you enjoyed. Now let's dive into some of the bonus plays. Now the bonus plays, I say this every video, the bonus plays, it's not because they're not as good as the top 5. It's just that some are a bit more volatile or some are just not ready yet. So I keep them on the back burner. They're still on my watch list. And if they happen throughout the week, I will gladly take them. I prioritize the top 5 because those are my highest conviction companies. But these other plays that I'll give you guys are still companies that I do enjoy playing as well. So I'll break it down into 4 different segments for the bonus plays: growth plays, value plays, large account plays, and also small account plays, because I know some of you guys have small accounts and still want to use this strategy. Let's get into it, right? Here are the growth strategy plays. Number 1 is going to be Bitcoin using BITX as a proxy. This is the 2 times leverage play. If we take a look here at Bitcoin and what they're doing, Bitcoin has right now broken the $100,000 support range. Daily downtrend is clear as day right now. We are coming into short-term, hourly, and 4-hour oversold conditions. Just maybe also looking for some weekly consolidation and some monthly consolidation too. That being said, this is going to be the next area that I will enjoy playing. The lower $90 range on BITX, that could possibly be down here. The lower $40 range. This is a 2 times leverage play, guys. You do not need to play it too close. Do not be seduced by high amounts of premium on leveraged plays, guys. You do not need to play these too close. It's not worth it. Don't get seduced by these crazy premiums. You can play BITX lower and still get the 0.5% rule, right? You can play it all the way down here. 42. With the way Bitcoin's going to open tomorrow, I would not be surprised if BITX is going to open down probably 6, 7, 8%. At that point, you may be even able to get the 40 strikes. If you don't like playing leverage bets, you can always play the IBIT. That same leverage on that same level on IBIT is roughly, let's call it 52 down about $50. So whether you want to play the 2 times leverage play on Bitcoin or just IBIT, or not play it at all. It's up to you, but this is one play that I'll be keeping front and center for me tomorrow. Second play is going to be SOXL. I like this one. It's cheap. It doesn't require large contract size, but that being said, it also has good volatility, but we do not have to play it too close. SOXL has some fantastic premiums, and I know that many of you guys that watch these videos enjoy playing SOXL. But when you're possibly heading into weekly consolidation for the markets, maybe the best idea is not playing this one super close and going for crazy amounts of premium. If you want to do that, fine, it's up to you. Myself personally, I might be a bit more conservative this week, playing the $16 to $14 range as deep as I can get, ensuring myself that I'm leaving myself a good room, a good margin of safety for the buffer. The next support is down there indeed, 16 to 14. The last growth play I'll tell you guys about is Trade Desk. Trade Desk has been coming nicely down into the support. I'll be looking for the gap fill after earnings, yeah? Lower $60 range. I would not mind playing Trade Desk down there. I really enjoyed their earnings. In the mid to low 60s, the valuation is not so commanding anymore. And I'll just be looking to play the bottom end of this long-standing support zone. And we're now moving back into that lower area. So $60 around for Trade Desk. I would not mind taking a contract down there. Those are three growth plays. Obviously, guys, there's tons more, right? But there's only so much time in the video. So that's everything for the growth plays. The value plays I'll be looking for, guys. Here's number one, PayPal. PayPal, why do I put it as a value company? It's not a growth company anymore, guys. They're not going for top line revenue growth. They're going for free cash flow expansion. The valuation down here is good, and they're at the bottom end of the last 3 years of trading range at the support lows. Keep that in mind, right? 67 down to $60. If I can find some mid 60s strikes on PayPal this week, right? If PayPal with the rest of the market just drops into the support range and I can find like a 65, 64, 63, maybe I'll be interested in playing PayPal overall. I think it's decent value down there, and there's definitely a ton of bulls sitting in this region as we've seen over the last 2 years. A second company that might be worth a look for you guys is Bank of America. Now, Bank of America has a nice support range below us, 43.74 down to 42. If we pull back in financials overall, I might be interested in playing the lower end of the support range. The 200-day EMA is also sitting right there too, and it's the closest line of defense that we have. The weekly moving averages are also sitting there as well. Easy little bank play for you guys. It's not that expensive to the same effect as JP Morgan. And lastly, Chipotle. Chipotle also somewhat of a more value-oriented play rather than a lot of the high growth tech names that we look at, right? Decent area of support below us, 51 down to 48. I would not mind riding the 49, 48 strikes. Seems to be a nice area that the bulls have used for defense many times so far. Down below there, I mean, the valuation at 47 is not so commanding. It's a little bit rich, but I still do enjoy playing Chipotle. Chipotle, one of the stronger names in the quick service restaurant game right now. So I would not really mind giving these bulls a chance right here. And even being assigned, I wouldn't really mind. The 200 weekly EMA is down there in the mid 40s, and I would not expect the damage to go much below that, right? This whole, high 40s to $40 range, I really would not mind playing Chipotle down there. Much better opportunity, in my opinion, than, chasing it up here at around $60, $55, right? This is the nice pullback area, and there'll be a pullback on Chipotle from there to where we might be assigned of 31%. So I do enjoy playing that one when the time does come. That's everything for the value plays. Now, in terms of the big account plays, guys, I'm going to be putting all my focus this week. And as a matter of fact, you guys can possibly see, I already have one play on Friday. I'll see if I can redo it. It's 50% profitable. I have a Visa play right now, 320 short put. We got it for $1.50 last Friday. It's now 50% positive. We'll see, but I mean, 320 on Visa is all the way down there, guys. Look how far down I have to be for Friday to get assigned on Visa. Visa and MasterCard, guys, in around the 200-day EMA. You can try to go for my strikes, or even if there's more volatility, a bit lower, 320 down to 310. Juicy strikes if you can find them. Even slightly above 320, I would not mind. MasterCard, same concept, guys. Even here, MasterCard 520 is not a bad bet. But if somehow, with the volatility and further declines, you can find MasterCard strikes 510 out of 500. That is a fantastic area to be playing these legacy companies. That would be nice pullbacks on Visa and MasterCard, guys. If you get a sign there, that's like 15% from the highs. Every time MasterCard and Visa pull back 10, 15% of the highs, it's always been a fantastic buying opportunity, and I stand behind that. High quality, high conviction stocks for me. Those are some of the best large account plays that I can find right now. And the other one is Berkshire. Same concept. Berkshire from the all-time highs is down 11% right now. A lot of insurance plays have not been doing too well, but Berkshire is my one of my number one go-tos for a large account. It's a very high share price, which is why I say it's for big accounts only. I like this range right here, 480 down to about 470. It's a nice sweet spot. spot. It's the 200-day moving average, top end of resistance prior from 2024, and it's just an overall nice area of consolidation for Berkshire. It is the tariff fear low environment too, so I would not mind being assigned some shares of Berkshire there, which is why I don't mind writing those contracts on this very solid company. That's everything for the big account plays. Just 3 of them to watch out for, right? There's so many more, guys, but I got to keep the bonus play short. Of course, if you want more, you can always consider joining my Discord, shameless plug, I guess. And now for the small account plays. Small accounts, right? Meaning that you don't have a very large account size. So as such, you can't really write short puts on many companies. Some of the ones that I do like, New Holdings, right? New Holdings is a large fintech player in Latin America. One of the biggest, as a matter of fact. Very attractive growth rates in revenue and EPS. And the valuation down here, under 12, is not that bad. Very nice PEG ratio. And the PE is not that bad. You can see that this company is nicely expanding net margins on a year-to-year basis. And also in terms of the EPS, look at this EPS ramp. It's going to be gorgeous in the next few years. And revenue ramp as well. Nothing bad fundamentally with this company, but it has been consolidating. That being said, if we can find some short put opportunities in the mid 11s, talking about $11.50 down to $11, you got one support range here, 12 to $11.50. And the second one, if ever you get assigned and want to DCA, is not that much further, right? It's only about $10.50 down to $10. This has been a nice area, overall area that this stock has kind of been trapped in here. You can tell by the weekly timeframes. Since the last roughly year of trading, right? I don't mind playing some contracts here, and if I get assigned, I would play a bit more down there. That's just one of them. Another one is SoFi. SoFi, this one hasn't been on the top 5 options list now for a few weeks. Why? Because it pulled out of our area, right? We used to be playing the 12s, 11 and a half strikes all day for like 4, 5, 6 weeks on the channel. Now it's rallied up. If we pull back as a result of what's going on in the world over the next 1 week or so, and we can have access to these strikes again, 13 out of 12 bucks, my favorite area to play SoFi. So just watch out, keep it on the back burner if it does come back. And another one that I'll be exploring is going to be Symbotic. Very decent robotics play right now. They're growing EPS, revenue and EPS at fantastic clips. The company is now slightly starting to come into net margin profitability. It's still a toss up quarter over quarter, but they are improving gross and operating margins nicely. EPS ramping up and to the right, and revenue ramping up and to the right. They have a big partnership with Walmart. If you don't know what they do robotic automation of production lines. Very important. It will be very important in the years to come. I like this one, guys, although I don't have a box on my chart right here. Excuse me for that. I like this one in the mid 20s. It has some good volatility. If for some which reason it's a very volatile stock, guys. If we pull back several days on end and unwind this entire move with big volatility, a rise in the VIX, and the stock moves its way back into the $30, $29 range, you'll probably find some good opportunities, guys. 27 down to 25. I would not mind starting to play that stock again. I've played it a few times publicly on the channel. This will be the next area that I'd be looking to play it again. 27 down to 25. And with that being said, guys, that is everything I had for you guys this week. Top 5 options plays, about 10, 11 bonus plays, depending on what you like, growth, value, big accounts, small accounts. There is definitely something for everybody. So if you guys found this video interesting, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these videos every Sunday in preparation for the upcoming week, but I also do Monday to Friday market recap videos. So make sure you join us back on the channel for those. And lastly, but not least, if you have any questions on the strategy or any stocks that you want my opinion on for running this strategy, leave them down below in the comments section and I'll do my best to help you guys out. I always love answering your guys' questions. And lastly, if you guys wanted to trade this strategy with me and over 150 other members that specialize in this strategy, you may consider joining our private trading and investing group, whereby you get access to all my trades, but not only the wheel trades that I do on a weekly basis. I also, as you guys know, do a lot of call options, leap call options, call debit spreads, and a whole number of other strategies that you guys see me run in my accounts. But the wheel is the one that we run the most. If you get access to all of my trades here, just a lot of my trades in the last 2 months. You'll see that for the most part, the wins, for the most part, largely outweigh the losses overall. Very consistent strategy, of course. We take some assignments here and there, but for the most part, we're always able to get out of those relatively quickly and profitably as well. You also get access to our private morning live streams, where every morning for 2 to 3 hours, I trade live, right? So we started at the open. I run it for 2-3 hours. I trade live and take all your questions on your stocks, your options, and your long-term portfolios. You can also, if you're not there, they're always recorded. You can ask me all your questions in our chat rooms throughout the day, and I'll be very fast to answer you too. Anything you want, your stocks, your options, your long-term portfolios, I'm always there to guide you guys to the best of my abilities. You also get access to our private videos where I go through a number of other strategies in detail, advanced guides on technical analysis, fundamental analysis, different options trading strategies, how to grow accounts, whether you have a small account, medium account, large account, which portion of those accounts should be in which strategies to get the best ROI and try to grow the accounts smoothly, consistently, and the fastest without taking on too much risk. And you also get access to my watch list too, guys. You get access to the options watch list. You also get access to all my charts. You can copy paste. It takes 5 seconds. You can copy paste all of my watch lists and you copy paste all of my charts at the same time. Whenever you guys see resistance, support zones, you just get to copy paste all of them. It takes 2 seconds. You get all of them. And whenever you guys see fundamental analysis too on all the charts, something like this on over 150, 200 stocks, that comes copy pasted on the charts as well. Just an added bonus for our members. If any of that sounds good to you, the link is always down below in the video description. Looking forward to seeing some of you guys in there soon. And if not, well, I guess I'll see you guys right back here on the channel. That's it for me. Have a great week in the markets. Take care. Don't be too greedy this week. Let the markets come to you and play your highest conviction, highest quality stocks that you prefer the most. Take care, guys. See you soon. Peace.